Hi guys, it's Stock Curry, and I'm going to give you an update on our short squeeze stocks, but the main thing that we need to talk about today is a new catalyst that could cause a major market correction and possibly even a market crash. So let's get into it! Okay, first of all, I just wanted to let you know about some minor economic news that's coming out Thursday morning. We have the unemployment numbers coming out. The economists expect it to be around 335,000 unemployed. But again, this is minor news. And the reason that it's minor is because we had the big economic data come out last week. As far as the number of new jobs was much lower than expected. It was about half, actually. That kind of triggered the sell-off that we've seen in the Dow and the S&P over the last 3 days. Now, regarding the unemployment numbers that are coming out Thursday morning, a lot of this is already baked in. Economists, we don't really see much movement. But I wanted to let you know about it just in case the unemployment numbers come in significantly higher or lower than expected, then that might move the stock market. So for example, if it comes in at like 100,000 unemployment, that could cause the stock market to go up. If it comes in at like 700,000 people have filed for unemployment, that could cause the stock market absolutely tank. But in general, this is pretty much built in, so I don't really expect a big movement on that. Now, the next thing that I want to talk about is a major catalyst that could absolutely tank the stock market over the next month or two. Now, we've talked about the Fed doing tapering of bond buybacks, and I'm not even talking about that. Let's just say the Fed doesn't do that. There is another major catalyst, and here's what's going on. In the United States, we have a fiat currency. We've had a fiat currency for about 50 years now, ever since we got off of the gold standard in the 1970s. And to go along with that, in order for our fiat currency system to work, we have to continuously raise new debt, continuously issue bonds in order to create new debt in the United States. That's just how our monetary system works. Now, the problem is, legally, there is a debt ceiling, so the Fed cannot borrow any more than a certain amount of money. And the problem is we are pretty much at that debt ceiling now. And so for the last month, the Treasury Department has been taking some drastic measures to ensure that the United States of America does not run out of money. Now, generally speaking, when we get to these points, Congress will go in and they will approve an increase in the debt ceiling, and we go on, it's like nothing ever happened. And every year or two, we just go in, we increase the debt ceiling, and that's it. We're good. We're just ignore it for the next year or two. The problem is, right now, Janet Yellen just came out and said something very interesting. See, she's not concerned about whether or not the debt ceiling will be raised. Everybody knows it will be. And that's why I haven't really been talking about it. I didn't really think this was that big of a deal. But Janet Yellen, who is the Treasury Secretary, came out and said something really that just wowed me. She came out and she said that the mere specter of a U.S. default can have drastic consequences. In other words, a delay in raising the debt ceiling could call into question the federal government's ability to meet all of its obligations and can cause, quote unquote, irreparable damage to the U.S. economy. Wow. If Congress fails to act on increasing the debt ceiling soon, it could cause irreparable damage to the U.S. economy. That is crazy. Now, they've got until about the middle of October to actually raise the debt ceiling. In other words, if they don't raise the debt ceiling by the middle of October, the United States of America will run out of money. We will literally be bankrupt as a nation. Now, of course, that's not going to happen. The debt ceiling will be raised. But what Janet Yellen is saying here is that if we wait until the middle of October to actually raise the debt ceiling, that is going to cause speculation that the United States might be able to not pay its debts, and that could cause irreparable harm to the U.S. economy. Now, here's the kicker. The government, the Congress, and the Senate have not even tried to start working on this yet. Now, in general, it probably will only take a few days for them to pass it, but that's not the point. They haven't even gotten started. It's such a simple thing. They just got to go in and do it. But they're so focused on passing the $3.5 trillion spending bill right now, they're not even concerned about the debt bill. Congress is just ignoring it, kicking the can down the road, and Janet Yellen's coming out saying, you've got to take care of this right now, or we're going to have serious problems in the U.S. economy. So what does that mean for the stock market? Well, it means if Congress continues to focus on this $3.5 trillion spending bill, and they continue to ignore the debt ceiling because they just assume they can pass the bill within a few days and they don't have to worry about it. Well, come the middle of October, if we start getting within days of running out of money and Congress still has not passed a bill, we could see a major market correction. Now, I don't think it's going to turn into a crash unless Congress just doesn't pass a debt increase bill. That's never happened before in the history of the U.S. government, but if it were to happen, that could cause a major market crash. Still, just getting close to that date could trigger a huge correction. So I wanted to let you know about this other trigger that we have to keep our eyes out for. And so keep that on your radar as you invest in stocks. Now that we've had 3 down days in the S&P and the Dow, I actually went ahead and bought some put options on the S&P and the NASDAQ today, expecting at least a small pullback down to about the 50-day EMA. Now, I don't know if we're going to get a correction right now or not, but I do think we'll at least get a small pullback. Now that we have some momentum in the downward direction, any other catalysts that come out, like more bad jobs reports or government bond tapering right now, that's just going to add to the momentum and trigger that market correction. So be on the lookout. We are in the worst month of the stock market. It could happen. We could literally be in the start of the correction right now. So just be careful. Hold on to some cash. Maybe do a little bit of hedging. And that's my warning for you guys. All right, let's get into the few updates I have on some of these short squeeze plays. For those of you guys who are new to this channel, my name is Stock Curry. I used to work as an analyst for some large investment banks, and now I analyze stock picks on YouTube. Every day I spend hours and hours and hours watching YouTube videos, and then I consolidate all of the stock picks from the top YouTubers and I put them together into a single video. I give you both the cliff notes on their stock picks as well as my analysis on their stock picks. Now, if anything I talk about today piques your interest, make sure you listen to who I say talked about that stock, and then go watch their video to get the full details on what they said. Now, all I ask for putting all of this together for you guys is that you hit that like button, subscribe, and follow the page so that you can get notified when I release my next video. In fact, I'll give you 5 seconds to do that right now. All right, before we get into our stock updates, I just want to remind you that I'm not a financial advisor. Nothing I talk about today is a recommendation to buy, sell, or hold. These are just my opinions, which may or may not be accurate. Please do your own research before investing in any asset. All right, let's get into our stock updates. And first up is BBIG. This is Vinco Ventures. ZipTrader let us know that BBIG just announced that they are going to spin off their crypto business. The shareholder meeting to approve the spinoff is on October 14th. Shareholders as of October 15th will get shares of the new crypto company via a special dividend. ZipTrader explained that spinoffs tend to be positive for both the parent company as well as the subsidiary, as both stocks tend to outperform the market during the 24-month period following the spinoff. ZipTrader said this pending spinoff will cause more upward catalysts for BBIG and put more pressure on short sellers. Next up is NIO. This is NIO, and they're a Chinese EV manufacturer. NIO was down 6% today after they announced a $2 billion share offering. Stockmo explained that NIO was not in dire need of cash. Instead, they are going to use the money to expand. Now, Stockmo looked at what happened the last time NIO did a share offering. In December of last year, NIO did a share offering and the stock dropped 6%, the same amount that it dropped on Wednesday. Stockmo showed us that back in December, NIO dropped again a little bit the following day, but then just 11 days later, it was up over 8% from the day before the announcement. NIO ran up about 15% during the following 3 weeks. If NIO were to do that again, the price would be at around $44 by the end of September. A month after that, NIO was up 38% from the day before they announced the share offering. If NIO were to do the same thing this time, it would get to around $56 by the end of October. So because NIO usually responds positively to share offerings in the months following a share offering, StockMo is not worried about this most recent share offering. He actually reiterated his $60 year-end price target on NIO. Next up is SPRT. This is support.com. SPRT was up over 20% on Wednesday. Keena Grace is looking for SPRT to break above $25 so that it can rise back up again. If SPRT can close above $25 on Thursday, then it has a real chance of rising back up into the 30s and beyond. And as ZipTrader pointed out, the short interest is actually higher on SPRT now than it was when SPRT hit $56. So that would imply that SPRT has an even higher short squeeze potential now than it did a few weeks ago. And the last stock to talk about is TSLA. This is Tesla. They're an American EV manufacturer. The Traveling Trader discussed why TSLA is up 37% since the May low and whether or not TSLA might hit $1,000 soon. First, the Traveling Trader looked at the momentum TSLA has built up over the past few months, and he said that this new momentum, combined with quite a bit of good news coming out about TSLA, is creating a snowball effect where TSLA will just keep going higher and higher. Next, the Traveling Trader moved on to the fundamentals to consider how soon Tesla might hit the $1,000 mark. First, TSLA is expected to more than double their revenue over the next 4 years. Their earnings and EBITDA are expected to grow as well. Further, compared to other large cap growth stocks, TSLA is expected to grow 3 times as fast as the other large cap growth stocks. Now the problem is that the share price is already quite high, so much of that growth is already priced in. Taking all of that into consideration, the Traveling Trader used a fair value model to come up with a price target of $712.73. The Traveling Trader said that in order to hit $1,000, there will need to be a catalyst to excite the market and generate excitement. The Traveling Trader said it would take something like getting closer to level 5 autonomous driving in order to do that. All of that said, given the fact that we are in the month of September, I do expect TSLA to bounce off of the $780 level and go back down to $700 here soon. Alright, I hope you enjoyed this video and got a lot out of it. Comment down below what your favorite stock pick is. And I wanted to let you know that Jeremy with Financial Education released an incredible video on Wednesday called How to Grow Your Portfolio to $1 Million. He talked about how he grew his portfolio to $1 million. Took him about 10 years to do it, but he did it. And so I really recommend you go watch this video. I had a ton of incredible information on there about how to invest into some long-term stocks in order to grow your portfolio like that. And then after you go watch his video, I have another link in the description below for my top 15 long-term hold stocks. So those two videos will kind of go together, watch one after the other, and I've got links to both of those in the description below. Now, if you're looking for a broker to trade all these stocks on, you can sign up for Webull using my link in the description below. When you sign up for Webull using my link in the description below and deposit just $100, Webull's going to send you 2 free stocks worth up to $2,300. Also, if you're not a U.S. resident, or if you're looking to trade OTC penny stocks, or if you just don't like payment for order flow, then you can sign up for Interactive Brokers. Interactive Brokers is a great trading platform. They have highly discounted trading throughout the world. Trades start at just $1 US, $1 Canadian dollar, or 4 euros, depending upon where you live. And both Webull and Interactive Brokers offer the full pre-market and after hours trading from 4 a.m. until 8 p.m. Eastern Time. Now, finally, I want to remind you to hit that like button, subscribe, and follow the page if you haven't already. I hope you have a lot of success trading, and I will see you tomorrow.